We've got Mr. Vasudevan also with us, the CEO of Equitas, to discuss earnings. Mr. Vasudevan, thanks for joining us. Now, while profits have improved considerably, the bank has seen margin pressure, and also a rise in NPA. So just talk us through the numbers first and really what the factors have been this time.
Good morning. First quarter, we had a fairly decent quarter. Our advances grew by about 38%. Our NA also grew by around 35%. Our expenses grew by 15%, largely because we had invested heavily in the last 2 years on conversion into a bank, and now we are leveraging that expenses. So if you see, our expenses grew only by about 15%, while the rest have grown by nearly 35 to 40%. And of course, our PAT grew by about over 75%. And from the deposit side, if you look at it, our deposits also grew by about 52%. Definitely, there is an increased pressure on raising deposit for the banks because the credit growth has been outstripping the deposit growth in the last maybe 3 quarters or so. But we have been able to maintain a fairly good inflow of retail deposits, and our overall deposit also supported us by growing about 52%. In terms of asset quality, what you mentioned, our GNPA was 2.75% for the first quarter. This compares to 2.82% of the first quarter of the last year. So it's slightly lower than the first quarter of last year. But if you compare with March quarter, yes, March quarter was obviously, in the March, your collections and business, everything is peaks in the month of March. So our March quarter, our GNPA was 2.52%. So there is an increase compared to March to June. But that's a normal seasonal increase that we always see in the first quarter, because that's the slowest of the quarter for finance industry. And we do expect that our NPA should recover and back to the March levels maybe in the second and third quarter as we go forward.
I just want to mark the stock as well, because that's seen quite a sharp slide of about almost 10%, but that's in line with the rest of the market, which is also feeling quite a bit of heat. By the way, the Nifty is now down a good 179 points in the Nifty futures alone. 1.6% is the kind of cut that you're seeing. Only 7 stocks standing to the advances in the entire F&O basket. But just wanted to carry on the discussion on earnings. Will the margin pressure continue because the bank continues to grow deposits amid competition? And if you could just highlight what the margin outlook is going forward, and what are the internal targets that you've set to ramp up the deposit base?
Yeah, see, our NIM is around 8.6%. If you see the last maybe 3, 4, 5 quarters, you would see that our NIM has been coming down maybe about 10 basis points a quarter or so. But if you also look at our operating cost to assets, that's also been proportionally coming down. If you, for example, take the first quarter itself, our NIM went down compared to the previous year. Our NIM went down by 10 basis points, and our operating costs went down by 20 basis points. Basically, you see, what's happening is that our high-cost operating cost products, such as our microfinance and the small ticket lab, which we do, they are the highest cost in terms of operating cost, whereas there are other products we have introduced in the last 2-3 years, where the operating cost is lower, the risk is also lower, and your yield is also lower. So as the portfolio keeps rebalancing over a period of time, you would tend to see the NIM dropping to some extent, but then the OPEX will drop a little bit more than that. So our net margin, if you see, it's more or less retained at what we used to have in the past.
Right. What led to the lower disbursements QOQ? Outlook on disbursements, total AUM growth going ahead?
Yeah, see, the first quarter, our disbursements grew by 5%. But if you break that up into microfinance and non-microfinance, our non-microfinance book disbursement grew by 17%, and they represent 75% of our total advances. Microfinance actually had a degrowth of 13% in the first quarter, largely because we had the elections in the month of April, May, and in Tamil Nadu, which is where about 65% of our microfinance comes from. During the elections, you tend to generally go very slow on disbursement in microfinance because of various sensitive factors involved. So our microfinance actually went down in the first quarter. But over the next 2-3 quarters, microfinance should come back to normal levels of disbursement, and we expect that for the full year as such, I think we should expect about anywhere around 20% growth in disbursement. And from an advances perspective, I think we have last quarter we had guided for advance growth of anywhere around 35% plus. As of now, we are still sticking to that guidance. We believe it is possible. The demand is out there very clearly, that the segments where we operate, the segments that we lend to, the demand continues to be very strong. So there's no problem from the demand side. And from a liquidity perspective, we have no issue either. So our challenge will always remain in terms of our asset quality management. At this point in time, touch wood, our asset quality remains good. And so we feel comfortable pursuing growth. But that's something that we'll keep watching all the time. If our asset quality at any time, because you know the economic situation today, there is stress in a lot of sectors. But at this point in time, our asset quality remains good. But if we ever see our asset quality coming down at any point in time, naturally we'll take a pause on growth. But for the present, we believe that that 35% plus is still possible for this year.
Okay. So, you know, you've talked about the AUM mix, but you know, why was it lower this time, as well as what the margin outlook is? If you could share that with us going forward. You know, we have seen higher NPAs as well. Is that on the back of a slowdown? Do you see that across segments? If you could just share that with us as well.
Yeah, as I said, our NPA from March quarter 2.52 has moved to 2.75. But it is lower than the first quarter of last year. You know, traditionally the first quarter collections is always the weakest. And that's a trend that is there. Historically, we have always seen that trend. So only silver lining for us is it's lower than the first quarter of last year. And we don't see any significant stress in any of our segments. See, we operate in microfinance, which is about 25% of our book. Commercial vehicle finance, which is another 25%, 40% comes from small business loans, which are secured by a house property, and the balance 10% is from MSC lending. So if you see across this spectrum of products, there is no particular trend that we have seen so far in terms of you know, any kind of an extra stress on our asset quality. So we believe that overall we are comfortable on our asset quality.
Okay, fair enough. Now, Equitas SFB promoters and holdings have in February this year proposed to offer about 47% of ownership in the bank to existing shareholders, of course, as we know, and then list the shares on stock exchanges as well, bypassing the public offer route. Any update on this, Mr. Vasudevan?
Yes, so we have drawn out a scheme of arrangement where 47% of the bank shares will be capitalized and given as a bonus share to the shareholders of the holding company. That requires a specific approval from SEBI, because we will be trying to list these shares without doing an IPO. So it requires a specific approval of SEBI. We applied to SEBI, and of course we had applied through the stock exchanges to SEBI, and it requires approval from stock exchanges. It also requires approval from RBI before SEBI can give their formal approval to us. And we understand, we are in touch with SEBI, and we do understand that our application is under process, and we expect the outcome to come out pretty soon now. And as soon as it comes out, then we have a 5 to 6 months process in terms of going through the NCLT, shareholder creditor meeting, etc. So maybe another 5 months or so from the time the SEBI approval comes. So we are really kind of looking forward to the SEBI approval soonest, and then get on to the next steps of NCLT.
Okay, Mr. Vasudevan, great to have you on the show. Thank you much for taking the time out and speaking with us today.